Hello traders, Jason here with SwingHigh.com. It is Monday, February 1st, 2010, and this is your post-market analysis. Well, we had a nice pop today in the markets, so let's get to it. The S&P up 1.56%, the Dow up 1.1%, the NASDAQ up 1.1%, the financials up 1.6%, and the Russell's up 1.15%. So all of those major indexes up above 1% today. So that's a sizable pop there. And let's take a look at the action here on SPY intraday. This is the 15-minute chart of the S&P 500 tracking ETF. And this morning we gapped up, did not even come close to testing that gap or filling the gap. So that was a sizable gap up, about 0.8% or so, and then from there we just held up. So there weren't really any good patterns today. It was just a very sideways, choppy day until the very, very end, and I'll show you why. I'm bringing you back to Friday, and this is a swing high, it's a lower swing high right before the end of the day. And if I drop a price level in there, you can see that acted as resistance all day today. And when we chopped higher, and we had this 200 period moving average on the 15-minute chart, and that line acting as resistance, and we just couldn't break above it. I remember this morning when I was doing my pre-market analysis for my personal trading, I looked at that level and said, that's going to be major resistance. I don't think, if anything, the markets are going to get any higher than that. I thought for sure that we would come up here and tag it and come back down. We didn't, but at least this acted as a major resistance. But going into the close, you can see that all day we kept making higher swing lows. We kept coming closer and closer to this line. And that gave us a nice ascending triangle formation on the day, as you can see by this triangle I drew in here. And at the very end of the day, we broke out of that ascending triangle on volume, and we even closed just above 109. So we did close above resistance at 109, which is bullish. We had an ascending triangle breakout on volume, which is bullish. Now that's the 15-minute chart looking bullish here with all the stuff that I just mentioned. Let's go out to the daily chart though. Now the daily chart came very close to having a completely inside trading day, meaning the real body of this candle was almost completely going to be inside of this candle, but then at the very end, literally the last 5 minutes of the day, we broke above that. However, it sort of was an inside trading day in the sense that we didn't make a higher high, nor did we make a lower low. So we did have a sideways choppy day, although this could be marking a swing low here. We would have to break above the 110 area really for me to call this a good swing low. Once we break above 110, I could expect us to come up here and retest maybe even the 115, 113 area. One thing that takes away from today's move is the volume. The volume was not very strong on this pop. Let's take a look at the market internals. The VIX bled out big time today. Now, this is the 5-minute chart. You can see just ate it. The VIX dropped 8.2% today, so that's a big drop in the VIX, which is significant. However, on this daily chart, this does look a lot like a bullish pennant or a bull flag. So technically speaking, I would expect the VIX to go higher from here if it could break above, this general trend line. Let's take a look at the trend. I am on the daily chart. Here we go. Stayed well below 8 or 0.8 all day, so that's bullish. The trend Q, almost overly bullish down here at 0.4. I would like to see or be closer to 0.8. I already looked at the VIX, sorry about that. The tick was predominantly bullish, and the tick Q about neutral. So those are the internal readings I have on the markets. Things look interesting. It's hard to call direction from here. Thanks for being a part of SwingHigh.com.